Okay, the first trend we're going to talk about is the development of the order automation market above the auction market, one of our favorite topics. And we've seen this certainly in our business at Rubicon, where we've invested significantly in the order automation business, and it's pushed us closer to all of these fine gentlemen up here. But part of that is the role of first-party data. So I want to talk about first-party data, both publisher first-party data and advertiser first-party data. And Brian, I'm going to start with you. You just announced this past week you're investing $25 million to build your second-gen DMP. And what you said is, quote, more than anything else, data provides leverage in a programmatic media buying world. So how important is specifically first-party data? And you can talk both about advertiser and publisher.
First-party data is extremely important. The biggest problem with first-party data is that there's a finite amount of data, and generally speaking, when you're trying to reach massive audiences, you run out of first-party data very quickly. So, we do a lot of business in the U.S., and you can augment some of that first-party data with third-party data, but it's not a very, some of that data doesn't really perform, and it's expensive in relation to the performance it generates. We do business in 40 markets around the world, and in most of those markets you can't get third-party data. And so we developed Turbine with an investment of $25 million, as you said, so that we could better harness data both from our clients and from publishers and create what we call second-party data, which is our ability to model off the data and create unique segments that perform better than if you were to buy third-party.
All right, second-party data. Okay.
Yeah, sorry, Jay, I have a question to Brian. Actually, my answer would be quite similar, but this 25 million thing I found quite impressive, and I think lots of people found that very impressive. Jay, do you know how many clients are in here in the room? I was about to say, but on this terrace, do you know? Have you any idea?
I don't know.
You don't know? Are there any clients in here? No clients. There we go. So we can definitely talk very openly. Because in my 4 months tenure, I've learned that that's kind of an issue in this market. So the 25 million. What I'm trying to understand is that a proprietary technology you're building? Is that where the 25 developing for 25 million? Is that what you're doing?
Thanks for that question. My technology budget last year was $50 million.
50.
Which is the money that we've invested into our platform. I'm not sure what you invested in at Publicis.
Less than
you
that.
were distracted last year, but
Brian is
By what?
This is not a distraction. First of all,
the 25 million is
thing.
the money that we invested into Turbine, and it's proprietary. So it's built from scratch, from the ground up.
Okay, for your DMP, and you don't think? I mean, I'm thinking. Like Omnicom, I think you cut a deal with aggregate knowledge, I think. So you're probably not spending 25 million.
Well, I think Aggregate Knowledge spent more than $25 million developing that
But you
technology.
have.
We have one of their board members right over here.
Jonathan.
All kidding aside, I think our strategy is actually very different than Brian's. We work as a systems integrator, and we work with all of the technology companies across the Limisphere, and we've tapped into a tremendous amount of innovation that's being funded largely by venture capitalists instead of with our own dollars, and we pick and choose technologies that work to piece together solutions around it. It's a different approach, and it's working well for us.
Actually, I think it is different, but it's we don't build everything, nor would we ever be able to build everything. We would never be competitive. So we've focused most of our efforts. In the early days, in fact, we built a DSP, and we moved away from it because we found partners that were very good in that space. But the DMP is something that we specifically wanted to build ourselves. But I think similar to you, Josh, we try to integrate as many great third parties as possible in terms of the technology stack.
And Arun, let me bring you into this. I mean, one of the things that you said is one of your 3 priorities is working with media owners to, quote, assign value to the media owners' first-party data. So what does that look like at Mediabrands? How are you doing that?
So again, this goes back to what we've been discussing around data. And the fact is, like Brian mentioned, most markets around the world don't have third-party data sets. And advertisers have first-party data sets that are limited. And so in the end, you're going to have to rely on publishers. So in markets like Germany and France, for instance, it's publishers which will actually help you get better targeting and superior solutions. So effectively, it's about engaging them. It's also about helping them understand the value of what they have and redefining what the word premium means. Because premium is not just page 1 or page 2, but it's actually my audience doing an action that I want, which is obviously verified. So at the end of the day, it's an education process on both sides.
What about next topic is clients taking? Is going client direct. And what's interesting to me, and Stephan, maybe you can start here because you've invested in this now, where in addition to servicing Publicis agencies, you're now going to independent agencies and client direct with the VivaKi offering. So why was that attractive? I mean, you all have plenty of work to do to kind of build automation into the operating agency.
No, I mean, the background is that we're so extremely good within Publicis that we can now dedicate our time to the outside markets. No, I'm kidding. It's the fact of the matter is that, you guys are investing 25 million. I should be your fiercest competitor, but we probably have a similar strategy. Anyway, but there's investment behind that. There's lots of, lots of intelligence in there. And the truth is, there's a market of, call them independent agencies, for example, who just do not have the means to go down that track, okay, and to invest that kind of money into knowledge and infrastructure. Nevertheless, their clients are in the need of the same kind of solutions, and that there is a market. And we're speaking a lot of agencies, which then elegantly takes me to the superstructure in terms of thinking about the alignment of technology, data, and content, and that is something I guess only a couple of groups in the world can actually build. And thinking about how rich your data can be, it is obviously useful to get a broad set of clients through agencies in there or directly. So that's the background.
Okay, all right. And what about Analyc? Does Analyc go client direct, or have you contracted with the independent agencies outside Omnicom, or are the Omnicom operating agencies your sole focus?
So it's definitely more of an Omnicom focus. We have worked with some outside shops, but in general, I think what we're finding is that if you look at the breadth of companies that we have under the Omnicom umbrella, we have a tremendous amount of opportunity within our own shop to bring leverage to the market, to bring new business models into all of our affiliated network agencies. And we've built out a stack now that is a global data platform, a global supply marketplace, a global buying platform that we can roll out across all those different agencies. And I think, what may be a little bit different in our approach is that we're a little less focused on building a standalone agency or business and a lot more focused on the idea of the transformative impact that we can have across the entire network. So I'm not out so much hunting for how do I get the next client as I am how do I drive this deeper into the operations of the entire business.
Got it. All right.
And I think that's a really important distinction because, and coming back to my problem with agency trading desks, we're at Xaxis, we're not trying to be a centralized resource for programmatic within Group M or WPP. We're building a programmatic media platform, and in the long run, we're going to be more sellers than we are buyers. And I think that is a distinction, and you have to think about how is the WPP, how is Xaxis different than Accuen? We're getting to a point where you can no longer compare these companies. It's sort of apples and oranges. And people like to say, Publicis is different than WPP is different than, well, they really are different, and they're much different models. They have different business models. They have different investment strategies. So it is an important distinction, I think.
Client direct?
So most of the focus has been in-house on the agencies. There are certain markets, though, where there are opportunities outside which we've gone for aggressively. So especially markets like Japan and China, where there are a lot of independent shops which don't have their own solutions, which want to work with us and we work with them. There are of course markets like Spain as well, which are very performance driven, where we've gone direct to clients as a performance solution. where 70% of our business comes from outside the group. So we do see ourselves as revenue drivers, but for now the focus is on our own group.
Now, Brian, let's go to you. So Xaxis is not a trading desk, we know that. You are more of a product company. You're not a service. I see these guys as operating service offerings, and you've developed a product. Yes?
Yeah, I mean, if you look at a media plan that comes out of one of our partner agencies, you don't see Xaxis as a line with a number next to it. You see Xaxis TV or Socialite or Xaxis Mobile or.
But those are packaged media offerings.
They're
right?
packaged media offerings.
They're it's an
So
audience.
we're not trying to be a service company. Each of the agencies is developing their own programmatic buying unit, and we're helping them do that. But Xaxis, we were never a trade desk. I would say in the beginning, when we founded the company 3 years ago, we did a lot of business that was trade desk-like, but we are migrating very quickly towards being a supplier to trading desks, not being a trading desk.
And,
So
and
sell
those
it,
trading
not buy.
desks are in your premises. Those have pushed out into the operating agencies, the trading desk function, and that you are really an audience-based media company.
Yeah, and I think to your point, eventually all media will be traded this way. So if Xaxis is occupying the space of programmatic buying experts, then one of two things would happen: either we would take over the agencies, which is clearly not going to happen, or we would go away, which I'm not going to let happen. So we're pushing towards the supply side, and the way we do that is through products.
Okay, and then one more distinction, and I know you're chomping at the bit. Arun includes linear TV, right? If it's not programmatic, you're not interested, right? You don't, the wider definition of Arun, where he's dealing with workflow, right? That is not Xaxis. That happens somewhere else, maybe in Group M or something else. So that's an important distinction.
That's right.
Okay. All right. Give it to us, but then let's talk about where Accuen sits in all this. And I kind of see these two guys as opposite ends of the ring here, and you guys in the middle. So
I think we might be talking about the same thing, just from slightly different perspectives. But I think what we agree about is all media is going to get bought programmatically, and programmatic is not a channel. It's not a separate kind of media, and it's the wrong distinction to be looking at it with. And so when you run a huge network, and OMG's 18,000 employees worldwide, and you say the way that we buy and trade media is going to be transformed by technology, if you're sitting there thinking, and the way that that's going to happen is, I'm going to do all of it, you're crazy. So the model has to be, at some point, how do we make 18,000 people more programmatic, and thus our agency more programmatic, rather than the other way around? The trading desk served a really, really useful function, I think, for all the holding companies. It allowed us to stand up this separate entity that we could bring new kinds of people, new kinds of skill sets, different kinds of investment models, put $25 million into development that's very, very hard to do in a professional services organization, all of those kind of things. And if you look around this room here, there's a bunch of people here who have been working on programmatic for 15 years, it seems like, and it's kind of arrived. And we're at the point now where the challenge is completely different. It's not, how do we get these skills into the agency? How do we get technology into the agency? It's, how do we democratize it now across the whole agency? And that's a tipping point, I think, for everybody here in the room.
cool. I'll start with you on this. Is when we all started, and it was years ago, and it was just the RTV business. A lot of the folks here from operating agencies or the holding company executives, I don't think they cared too much about what we were doing. But as we've built the infrastructure around order automation, in addition to the auction, and as we've shown how to leverage first-party data, and perhaps as the finance guys at the holding company have seen the profitability of some of the operations that you guys run, there's been a much more increasingly unified approach to automation. So how much is that happening where when the media owner comes in to talk to an investment team, a trading team, the discussion is unified, where they're talking about bespoke, they're talking about order automation, and they're talking about the auction? and is that the outcome you're driving for?
Yeah, so I think a couple things. When we talk to publishers, one of the things that we say to them right out of the gate is that programmatic isn't a separate channel. You shouldn't have a programmatic team and a direct sales team. You're screwing both of them, and you should be looking at building a relationship with the holding company. We approach the publisher community from the perspective that traditionally media has been bought on a very transactional basis, often in a holding company where you're talking about, literally hundreds of teams that may be dealing with the same publisher, but you're not sharing any information about price, you're not sharing data back and forth across these pipes, you're not looking at different opportunities to buy smarter across them, you're just issuing an IO and acting like the relationship goes away at the end of that. I think what programmatic and what platforms have done is they've allowed us to sort of re-envision the relationship with the publisher community and to say publishers are actually part of our platform. They're strategic partners to us, and we need relationships with those publishers that are mutually beneficial to both of us and that allow us to more effectively achieve the results that we're looking for our advertisers. One of the things, you guys have to get the question obviously because you had great press about this week. But I think one of the things that all the articles about the, the 100% Xaxis or the amps go to 11, kind of news is that from what that misses is that there's actually a ton of publisher benefit that's involved in creating some of these sort of separate trading pools. And when you look at why are people setting up these different pools, part of it is that what we've all done very effectively over the last decade is we've put a lowest common denominator standard in place that allowed us to build out this ecosystem. It's awesome. It sucks for publishers though. There's no way for them to differentiate themselves within that. There's no way for them to do higher impact type of execution.
And there's no way for your operating agencies to differentiate themselves to their clients.
Absolutely. So I think if you look at what's starting to happen now, I see, certainly we, and I think others up here would say, that we're starting to see publishers as part of the overall technology stack that we're working with, and what we're looking to use these various private pools to do is to bring more transparency to who are the advertisers so that publishers feel more comfortable working in different ways. We're looking to bring specific sets of publishers into the market that we know we want to work with in much more strategic ways. And we're looking to jumpstart innovation by eliminating some of the hops that you have that force you to a lowest common denominator type of integration. And publishers are just another technology partner in that.
Got it. All right. So Brian, take us through you guys made some headlines in the last week because you said, hey, everything's going to be private. And it's funny because I don't even know what triggered that. I mean, you've kind of said this publicly numerous times before. You said you really don't want to be part of the auction.
So Group M late last week said that by the end of the year they're going to buy 0 impressions at auction. That was a blanket statement, and obviously in most markets we are part of Group M, so that would apply to us. Within Xaxis right now, 62% of our inventory is bought, is on a forward contract or reserved. So we still do have, quite a bit, 40% or so, that we buy in a marketplace. I would agree with Josh that, you probably don't want that to go to 0 because there is a need for that. But I would like to see it at 90, 95%. And the reason is simple. Advertisers use WPP or Xaxis because they want a competitive advantage in media buying, and they want to find their audiences efficiently and effectively. That means that they should use their leverage to get better rates. And we feel that if all you're doing is using your first-party data to buy inventory in an ad exchange, you haven't really accomplished much. And there's lots of advertisers that talk about their trading desk and they're bringing it in-house, and that's actually what they mean from my experience, is they're going to have a contract with the DSP and they're going to hunt for cookies in an open exchange. And I think that's, it's a nice start, but it's not really an accomplishment. And so for us, our role in the organization is to give advertisers leverage so that they have better pricing on media, that they get better performance, that they find their audiences in more engaging places. And we think that means moving away from an open marketplace.
Okay, and Arun, unified negotiation?
Yep. I think this has especially been seen already in markets outside the US, where private marketplaces have been in vogue and they're only growing. I think I agree with a lot of what Josh said, which is that effectively you have to look at publishers as partners, which we haven't, because I don't think we've yet gotten to the stage of telling a publisher that I will pay you more for an audience that I really want to buy because it's of value to me. I think the discussions are still, can you give me a discount, can you give me a rebate, etc., etc. So we need to change that conversation. Secondly, advertisers do want transparency in the types of inventory that they buy. Having said that, I think the exchange still plays a vital role, because is it possible to find inventory that is viewable, that is verifiable, and that still adds value? It does, which is why our position is it'll always be fluid. The percentage that goes into private marketplaces versus what goes into an exchange will be fluid, but the role of the private marketplace will become bigger and bigger. It won't decline.
I agree with that, except I would say that if you have scale, and I think the only businesses that are going to survive in programmatic are going to be scaled businesses, then you don't necessarily need to go into the marketplace, because you can become the market. And within WPP, that's our ambition. And I would also say that publishers are going to make more money doing this. So our publishers, when we look across all of our markets, make 30% more on a CPM basis than if they were to use an exchange or an ad net.
An open auction.
Yes.
An open auction. That's the difference, right? And Stephan, I mean, I think we said you come from headquarters, and you're an operating agency guy by background, focused on technology. So that speaks volumes in terms of where VivaKi AOD is going, and that would seem to be a whole lot of unified negotiation.
Yeah, it speaks, and so encyclopedia kind of size. Yeah, I agree. I find it still strange how you argue, Brian, because sort of everything I'm getting from our clients is that they're running away from Xaxis because there's this transparency issue, etc., etc. And what you're saying now is sort of a new attempt to get going into that direction again, because you're pulling out the inventory, etc., etc. I find it, we are all in this responsibility towards our clients, and clients are getting very, very clever, and there are companies like Adobe who basically, I've seen presentations where they're basically saying, let's bypass all the media agencies and we're going to pull through Rubicon directly and screw all these guys in the middle. So I find it very dangerous as a strategy to start put a blanket over this business again, and then may the better win. Ultimately, I think it's about really connecting brands and businesses with their audiences. That's what we're here for, okay? And you could say, may the better win, but we have to do it in a way that, sort of, I don't want to be ethical, because this is not an ethical business, and please tweet that, but it's just, I don't know, it's a little bit weird hearing this directly coming from you as an agency that, has been creating some turmoil in the market amongst clients who just have been rejecting the model you have applied. So I just wanted to have a little discussion around that, because it's from my point of view, it's really annoying all the time, because now seriously, I mean, we are operating exactly the opposite way, as you know, and I've inherited a model, but even if that wouldn't be the case, I would probably have done exactly the same thing, because I feel it's a very honest, it's a very transparent way. Our clients know what we're buying for them. They know our fee structures, etc., etc.
I love this argument.
And so he loves this one because he has his PR department that has prepared the answer.
Listen, Stephan, you disclose the price you pay for media. Congratulations. What have you accomplished? What is the performance of the campaigns you run?
One thing has nothing to do with the other. I'm just telling my client,
if you don't mind,
what I'm paying for his buy. That's all.
Right. Fantastic.
I think that's
congratulations.
kind of
that's amazing.
Business.
Except that's not what clients are buying. They're not buying a business model. They're buying performance. They want to engage their audiences across all channels. Xaxis goes on a media plan with a price. If that price is not competitive, we don't get bought. If we don't perform, we don't get bought.
Right. So a couple of weeks ago, we've seen what I was about to say, Roxy Music. No, it's Rocket Fuel, and Mercedes-Benz in the press because So I literally yesterday I get an email about one of our clients who went direct, and basically they're getting screwed. Let's face it, okay? Because it's inventory that doesn't exist. It's worthless, whatever. And basically in your model, that's with us, you see what it is, and we have quality standards, and we control the stuff.
In many cases, it's not performing.
What?
Right? So
you invested
zero in technology.
That is not true.
The reason
We don't invest 25 million.
right. The reason is that you have hung your hat on disclosure and transparency.
Yeah, and that is a fair model.
Maurice has said he'll never be a principal in a media transaction. We
Right.
don't agree with that. Xaxis is not an agency. We
Right.
never have been an agency.
Yeah.
We are a platform, and we feel that the business model is justified by the performance. And we do not get bought if our prices are too high or if we do not perform. We need this business model because we do want to invest in the technology, and we want to create unique, engaging products that our agencies can buy. So don't confuse Xaxis with an agency. It's not. We're part of WPP, which is also not an agency.
Yeah.
We're a platform to ride programmatic
for
media products. And I think, in your comments, you've thrown several things my way, sort of like the playbook of how Publicis argues against Xaxis, and it's all very messy. It's around transparency and disclosure and fraud and everything else. But I would just say, at the end of the day, we perform, and that's why we get bought. And the business model is such that we need to make investments in data, in inventory, in technology. And we can't do that if we are running it on a 10%. The other thing I would say is careful where you throw this mud, right? Because you may disclose your media prices, but do you disclose all of the rebates that you may get from technology vendors? Kickbacks from
Wow! The angel! Let's call him
my clients,
Angel Brian.
Excuse me, my clients know exactly how I make money, and they literally sign a contract.
Oh, they do?
That says,
I've seen
I
your
know
contracts.
how
I've seen
Xaxis
your
makes
contracts.
money, and I'm comfortable with that.
I've seen your contracts.
So
I've seen your
careful where you
strategy
throw mud,
paper
Stephan.
to come up with a new transparent model. So Brian, we know everything. Don't worry.
I mean, it's a very messy criticism. You need to tighten it up a bit. I know you've only been on the job for 4 months, but tighten it up.
I'm just, ultimately, Brian, I'm just reflecting what I'm hearing from clients and from other stakeholders who are telling me that, the Xaxis model has created some turmoil.
It absolutely has, because it has created turmoil because it's not a traditional agency model, and we think that is what we need to do.
You have not done anybody a favor because the clients have become very suspicious and they're questioning many things, and now they're...
Listen.
He's not an agency trading desk.
I'm not an agency trading desk.
You're not? Okay.
I'm not an agency.
You're a technology company.
Clients do have an issue with this. I'm not going to say that no clients have an issue with this. We think that over time, they will understand that in order to provide value, you need to invest in the business. And it's awfully difficult to invest the way we invest with a disclosed model. We are transparent. We are the most transparent company in the industry in that everybody knows how we make money. Everybody knows how we make money.
Yes, true.
I'm not sure people know how AOD makes money if AOD makes money.
All right, gosh. Oh, my goodness.
All right. It's all good. It's all good. We're all advancing advertising automation tonight.
I'm seeing Brian Weezer.
Okay.
Look what he's picking up. Gosh,
look how happy he is. All right, let's move to one more topic, and then we're going to do word association, which should be particularly interesting tonight. Arun, I want you to explain for a minute why Google is an ad holding company. And then we're going to take a survey of the panel.
Okay, so if you look at Google's approach, in many respects, I think I definitely feel jealous about the way they've approached it, because as a sell-side player, they've done a lot of things which as a buy-side player, we as an industry should have done. So if you look at the way they revolutionized the way search was bought, it was their technology. It's basically the sell side that's driven it. But if you look at the way they look at their products, and then you look at the way they've structured it, and you look at the way they make it bear in terms of advertising, there are a lot of similarities there. Now, obviously, they have a lot more product and technology than any of us do, which is fine, which is a distinction. but in a lot of the way they approach, and the bigger and bigger that they've gotten, in fact, they've started to mimic that behavior a lot more. And I just feel like there's a lot to learn from them as well, because they have actually revolutionized the buy side, whereas they are largely a sell side player. Everything they do is to monetize advertising.
Okay, so let's survey the panel, yes or no. Josh, is Google an ad holding company? Yes or no?
2 words?
2 words.
So I think they're more complex than that. I think they have media platforms, and
It's like 17 words.
I'm going to channel the Havas guy from last year and go way over my time. I apologize. They have media products and they have skills products, and we tend to buy more of their skill-based products from them and use them to build our own capabilities. To us, they are definitely a technology vendor, not a media vendor.
Okay. Stephan.
Agreed.
No, they're not an ad holding.
They're not an ad holding company. All right. Okay. All right, now we're going to do our word association. So open up your Twitter. This could be good. Okay, so I'm going to mention a word or topic, and we're going to go up and down the line here. And please, one word. Okay. Brian Lesser, I'm going to start with you. And I did not plan this, but my first word is Maurice Levy.
French.
Maurice Levy.
My boss. Oh, that was 2 words, sorry.
Shopping.
Old.
All right. Plan B.
Those are coming off.
Yeah, all right. Second, John Wren.
American.
Not my boss, but that's 2 words again.
Boss.
Accuen.
Plan B. Martin Sorrell.
Brilliant.
Sir.
Martin Sorrell. Josh. Come on.
Brian's boss. I got to think about this one more.
Arun, Martin Sorrell.
Aggressive.
Josh, Martin Sorrell.
Icon.
Smirking. Pog.
Ego.
What's the word?
Pog?
Publicis Omnicom Group.
No idea.
No idea. All right. Memory fades fast. Scorned love. Okay. Pog.
Ex-girlfriend.
Loss.
All right, Pog. Next. Automation. Brian.
Inevitable.
Chewing gum.
Here you go. Okay. Automation.
Uninteresting.
Necessary.
Year of. I'll start with Arun and we'll come back. Programmatic.
Problematic.
Programmatic. Programmatic.
Your question doesn't make sense. Is it
One
the word?
word.
Programmatic.
Yeah.
Ticket.
Meal ticket. Programmatic. Great.
Great.
Programmatic.
Innovation.
First part of the puzzle. Workflow.
Brilliant.
Workflow.
Point solution.
Workflow.
Future.
Broken.
Second part of the puzzle. First party data.
Necessary.
Yes.
Stephan.
Yep.
Limited.
Supply constrained. The I/O.
Dead.
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 Sure. History.
Always on. The RFP.
Don't have a word.
Speechless. Okay. The RFP.
Partnerships.
Opportunity.
Declining.
Always on. Percent of spend in FTE agency compensation models. Arun, one word.
Kill.
Performance.
No, can you say that again? Sorry.
Oh, come on.
No, I had 3 glasses. No, I say that.
Percent of spend and FTE agency compensation model. How you get paid.
Reality.
Evolving.
Conflicted. Pay for performance agency compensation model. Arun.
Future.
Helpful.
One of many in one word.
Future, I agree.
Aligned. All right, Brian, I'm going to switch it back to you. Yahoo.
Marissa.
Stephan.
1997.
Oh, there we go. Yahoo.
Not an exit.
Marissa.
9 Lives. Microsoft.
Come back.
Come back.
Xbox.
Potential.
New CEO. Google.
Innovative.
Tricky.
Partner.
Juggernaut.
Frenemy. Facebook.
Mobile.
Tricky.
Josh.
I'm gonna go with mobile.
Stuck.
Intent. AOL.
Content.
AOL.
Bob.
AOL.
Hardest working.
Platform.
9 Lives. The 24-year-old media buyer.
Numerous.
I love numerous. I'll take that too. Numerous.
Oh,
Perfect.
come on.
No, it's good. It's good. I'll stick to it.
Trader.
Hope.
Math major. The 50-year-old managing director, Arun.
Relevant.
Aspiration.
Needed.
Strategy.
Hiring math majors. The client.
The king.
The client.
Pushing.
Smart.
Smart.
Data-driven. Television budgets.
The same.
Lifestyle budgets.
Opportunity.
Increasing.
The mother lode. Rosé-fueled negotiations. Arun.
I haven't done that, so I can't tell you.
Josh, rosé-fueled. I know you have done rosé-fueled negotiations.
You're negotiating my answer right now? I'm empty.
Empty. All right. Oh, that's a good answer. I like that.
Crap.
Overrated.
Do not try this at home. Our 3rd annual agency trading desk program in Cannes in June 2015. Arun.
I think like Brian would say, if it's a trading desk, we won't be there.
Josh.
Renamed.
Call me.
Tighter.
RSVP now. Thanks everybody for coming.